Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we come into the second part of September, we're going to continue to see some of the themes that I've been talking about for the last 4 to 6 weeks. One of the key elements will be a continuation of an erratic performance from the economy. We're not going to see the same type of metrics that we saw coming out of Q2 as we go through Q3. Now, these metrics are going to be very volatile, and they're going to miss more than they're going to come in better than expected. As we look back on last week, we continue to see the market slide. We see the large cap tech stocks continuing to lead the way down, the Apples and the Googles, but all of the tech stocks are still under pressure, and so is the NASDAQ. As we come into this week, the major event is going to be Chairman Powell is talking on Tuesday, Wednesday, and Thursday this week. I have no idea what he'll testify to, so that could create some uncertainty or some positive events. For sure, it's likely to create some volatility. We won't know until we come into that, but I believe the technicals are going to be what drives the markets this week, and I'll go through those details here in just a few minutes. But on a fundamental basis this week, what we're going to see, there's going to be existing home sales come out on Tuesday. That's expected to come in at 5.9 million. On Wednesday, we're going to see the Richmond Fed manufacturing report come in. That's likely to be mixed, maybe a slightly better, because manufacturing has actually been performing pretty well during this last several weeks. There will also be FHA home prices, and they're expected to show a 0.6 increase, as one of the primary places that inflation is showing up is in residential housing. On Thursday the big event will be the unemployment claims, expected to show 880,000 increase, and the continuing claims came in at 12.6 million. If they come in less than that, that will still be bullish, because it was somewhat of a surprise that we came in as well as we did last week. That number seems to be bouncing around just a little bit. We'll see what kind of number we get this week. I was unable to find any solid estimates of any sort out there. They were somewhat all over the board. As we go through this week, there's other elements that are going to continue to drive the markets. 3-day volatility indicator is at 54, which is a lot better than where it was a couple of weeks ago at 110, but that still allows for the algorithms to be involved in the markets to a certain degree. On a weekly basis, we're at 163 handle volatility, so that still suggests we could see quite a bit of movement this week. I will go through details here in just a couple minutes on what the setup is. Going back to Chairman Powell's testimony this week, that will represent the most uncertainty this week and is likely to generate the most volatility. Most of these economic reports I just mentioned aren't really material, except for the jobless claims and the continuing claims. That's always the big number that the markets are watching right now. Let's go ahead and take a look at the charts and see what kind of volatility is setting up. As we review the WaveTech database, there's very little that occurred in the database this weekend. The short-term database continues to show a 17.1 bullish ratio. The output of the models on Friday showed 3.2 having 319 buys versus 290 exits, which is neutral, showed 382 sells versus only 79 buys. And this was a negative ratio. So we continue to see this rotation down at the bottom here. As I've been discussing over the past week and a half, if this database remains under 26%, this is going to continue to suggest that the negative configuration will continue. Right below here, the weekly 1.2 had 159 buys versus 112 sells, had a slight positive ratio. 3.2 long weekly had 146 buys, 190 sells. Basically, this was not material in any way. The bullish percent remains at 69.23. I thought we might see a little bit of liquidation here with the downward market last week, but it continues to be quite firm on an intermediate basis. Let me spend a few minutes just talking about what this means. The short-term trends are down right now. where the intermediate trends continue to have a positive upslope. Otherwise, we're setting up a very large consolidation phase, which is going to consolidate the gains that we saw since March. And we're continuing to see this rotation happen. I'll go through this in the technical section here in a minute. But the database is reflecting exactly what's going on. Short-term downside, intermediate is consolidating, and there's a broader range of expectations in the weekly charts versus the short-term daily, which are firmly in downtrends at the moment. As we review the S&P futures, the PPMs continue to be in a downtrend mode. PPM1 is a minus 0.32. Now it's trying to break through its first derivative, which is suggesting downward momentum is stalling here. Anything in a negative 0.25 will suggest that the 10-period moving average, which is currently at 33.48, dropping about 10 to 12 handles per day. So tomorrow to be somewhere around 36 and then 24. So there's going to be a lot of downward pressure continuing for the next couple of days. As I'm covering this, we're about an hour and a half from the London opening, and we're trading just below the 3,300 level, and the low tonight has been 32.96. The key level on the futures is 32.80. A penetration of that level will indicate a further decline with the possibilities of printing down below 3,200. Let's take a look at the weekly charts so you can see exactly what the target ranges are on the downside. We closed under the 10-week moving average for 2 weeks in a row, which is starting to cause the PPM1 to continue to deteriorate. PPM2 is still positive, and then PPM3 has cut through its first and second derivative, which tells us suggests there's a large consolidation range setting up. Now, I've mentioned this, I believe 2 weeks ago, that I thought we could go as low as the 21-week moving average. That's currently at 31.78. If we just look at the grid here on weekly, the S3 is 31.81. So that would represent a move down to that level. That could be hit this week, especially if Apple continues to decline. I won't cover Apple tonight, but the downside in Apple is still substantial. There's at least another 10, maybe 15% on the downside in Apple. So that is in a big downtrend. These things are starting to get a little extended, so we could see some short-term volatility, but everything looks like it's going to continue down to hit some of these key support levels. And this is what I was mentioning when I was discussing the intermediate database. The uptrend on the intermediate level are not likely to be broken, but we are going to enter a very large consolidation phase. I mentioned that we're in a roughly 163 handle range on the volatility range, and you can see on the grid here that the high is 34.92 and the extreme low is 31.39. My expectation for this week, we're probably going to go through that 32.80 level. Could get out of control depending on what happens this week, whether Powell says more stupid things like in the previous presentation he made, but we could see this thing really start to accelerate here. And there is a fair amount of danger in this market on the downside, at least from a short-term basis. So the key level on the weekly will be 32.80, 32.74. Break through that, then we're looking at an extreme range of 32.28, possibility of printing down to that 21-period moving average. Going to the cash market, we also penetrated through the 10-week moving average on the cash markets, projecting a possibility down to that 21-period moving average. Now, it reflects Friday's pricing. It's changing about 20 points per day, so that's going to be on a cash market around 31.90. Futures are actually making new lows as I'm talking right now at 32.95. So there is quite a bit of downward pressure. We'll see if it holds into the U.S. Open in the morning, but there's definitely going to be a move down toward on the cash market to a minimum of around 32.66. This is a number I discussed a couple of weeks ago. The extreme possibilities is S3 and the STX 3226, 3191. Next market we'll cover is the NASDAQ futures. The NASDAQ futures have now declined down to 10,838. The S1 number is 10,838 exactly. The S2 number is 10,740, and then 10,641 is S3. As far as the moving averages on a daily basis, we're below all of the averages right now, and ppm's minus 0.62, minus 0.25. ppm 3 is basically flat, slightly up at plus 0.09. What this is indicating that we're in a downtrend, and it's starting to accelerate a bit on the downside. Just a couple hours ago, the NASDAQ was up about 0.25, 0.3 in a session. We've had a 1% turnaround already this evening. The weekly charts illustrate that the S1 number is 10,709, and then S2 is 10,465, which matches with the 21-week moving average, which is 10,454 versus the S2 number at 10,465. So that's going to be your target range, 10,465 to 10,454. So there's quite a bit of downside. Now, these are weekly projections that we're looking at, but ultimately we're going to get to that 21-period moving average. And when it does, that's going to be a buy point, both on the S&P and the NASDAQ. Next market we'll cover will be the Dow. The Dow continues to bounce off its 10-week moving average. We've been up there a couple times. We're continuing to see a substantial amount of downward pressure there. It's currently 93.17. The Dow is trading 92.77. Looking at the grid here on a weekly basis, we see that S1 is 92.71, so we're getting close to the S1 level. S2 is 92.42, and the R1 on the upside is 93.23, matches with the 10-period moving average. That will be substantial resistance with the ppm down minus 0.34. We also have ppm 2 down minus 0.31, and ppm 3 is also negative. So when these ppm indicators, they're price, pressure, momentum, they give you the angle, the tack, and the direction of the trend. Anything over 0.25 is a downtrend, which tells us that there's only a 40% probability right now to rally above those moving average numbers. ppm 1 tracks the 10-week moving average, 93.17, ppm 2, 95.67. It's looked like over the last 2 weeks that we're going to be able to break above that number, and we're still seeing the ppm setting up a bottoming phase. It's possible that we'll see a print down into the S2 level, 92.42, before we'll finally bleed off enough of this downward momentum to set up a significant bottom. But for now, it looks like we're going to continue to drift lower. The final market I'll cover tonight is gold. We continue to be locked in this sideways range in gold. We've seen an overnight low of 1945, a high of 1962. We look at the grid, R1 1968, R2 is 1949, so we went just through that. S3 is 1943. We've already printed an S2, S3 number. On the upside, we've not printed an R1. I suspect just a very sloppy sideways range. As I've been discussing in gold, there's nothing to move this out of this range right now. The configuration on the ppms are very mixed, not giving any clear signals to a market direction. There's still an underlying trend on the weekly basis. As I review the weekly chart, you see that ppm1 is still a plus 6.6, but we are taking out the first and second derivatives. The 10-week moving average is 1960. We've continued to trade right along that line, but it's starting to lose momentum, and it won't take much to print down into the grid 1947 is S1, so we've printed that number already. Next level 1930, 1914, and as I mentioned 3 weeks ago, the key number is 1908. If that number were taken out, we would see a substantial amount of weakness. I don't expect that's going to happen. I think the S2 number is going to be an extreme 1930. I suspect that we'll continue to hover on either side of this 1960 10-week moving average. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night.